Well, we finally get some big data released, and what do we get? More uncertainty. It's unbelievable. You can't write this stuff. And what we saw today is once again just conflicting data, all in regards to jobs. Non farm payrolls actually higher than forecast. However, they got revised last month at a negative 100,000. And everyone's painting reasons for that. Oh, it's the Fed layoffs. It's this, it's that. Bottom line is you lost those jobs. I don't really care how you paint the picture. But then we got unemployment rate. The unemployment rate was at 4.6%. That's creeping up, and that's a sign of recession, which I'm going to get into in a second. However, we got the participation rate increased. So, all over the place, nothing really big enough in one direction or another to really drive the markets. We saw interest rates improve ever so slightly, but nothing of significance, especially with the big inflation number coming out on Thursday. So, once again, it is a wait and see. So, all that BS that you're seeing people publish, oh my God, interest rates are going to drop, unemployment, blah, blah, blah. It's all bullshit. They don't really know. I think what's really going on, and you want to hear it here first, stagflation. We're seeing unemployment increase. We're seeing inflation remaining sticky, and the Fed doesn't really know what to do. Like I said, what was it, probably 4 months ago? The new norm right now for inflation is about 2.7 to 3%. And we're just going to have to live with that. And it doesn't really seem to affect anything because the consumer just keeps on spending. If you looked at retail sales numbers today, they're great. They were higher than forecast. I mean, we Americans, we just love to spend money. So even money we don't have, we love to spend that shit. So that's where I think we're at. We're not going to really move markets until we see what inflation does. And honestly, it could be conflicting. We'll probably end the week slightly lower on interest rates. But make no mistake, we're just hovering between 4% on that 10-year treasury and 4.2%. And it looks like before the end of the year, there's not going to be much change in sight. So just hang in there and be strategic with your decisions. You need to lock. Think about using yield spread. Talk to your lender. If they don't want to disclose what yield spread is to you, you need a new lender. And I'm always here to help. That's the great news. All right, y'all. Have a good evening. Be coming to you tomorrow with another episode of the Daily Dose. Appreciate you checking in. Make sure you hit that subscription button so you never miss a beat and get wonderful insight to what's going on. Have a good night. Talk to you tomorrow.